The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to TFNN's early edition. We're going to start out with the Dow Jones Transportations, folks. Unfortunately, there's a error on this. It's not a hanging man candle. It's a hammer. That means it's hammered out the bottom. Hanging man means you're just the opposite. It's like almost like a upside down shooting star. But this is a hammer pattern. Very unusual yesterday because the Dow Jones was down 300 points. Dow Jones Transportation was down almost 300 points at one time and completely reversed that to close up on the day. We also were able to close up on the day in the Russell 2000. That was also the case. So we've hammered out some type of a bottom here. The question is, how long is it going to last? The rally that we had yesterday was about 70 handles. We went up, our previous rallies, as you know, have been up around 55 handles, and now we've had one that has been 70 handles. We haven't really done too much. We chopped around a little bit last night, 30, 40 points, up and down, but that's normal now with the volatility that we're having. To me, the most amazing thing of all, through all of this, is how the VIX is acting, folks. I mean, it's just totally amazing to me that the VIX is not trading up around 51, given where we are in prices. Back in August the 24th, everybody was scared to death, and the VIX was trading at 51, and we're, basically half that price. And that's very, very unusual. I don't understand it. I listened to Basil to try to get an explanation for it, but it's really an outlier event to see the market move that much and virtually no fear in the market. To me, that would be interpreted as potentially, very, very bearish, down the road. So we want to, just watch that very, very closely. Now, the thing that we were watching yesterday, of course, was the New York Stock Exchange Index. This is what we posted yesterday morning when the show was on. We hadn't quite opened yet. And as you can see, we did get down to that 9,000 level without any trouble at all. We closed around 91 and change, 91.50. So that completes that very large ABCD pattern that we had starting back on May. And then we came down into the August 24th low. Then we went up and we took out that August 24th low. And that signifies that we're in a major, 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 major bear market. If you'll remember back in 2007, in August, on August the 15th, we hit a major point. We had the same type of day like we had yesterday in the market, where the Dow was down 300 points that day and the Russell was unchanged on the day. It was actually up on the day. And I remember that because Skype was out that day, and I was talking with Tom O'Brien on the phone when all this was happening, and that was the bottom that took us into the October high. And then from after that, we had the flying Walinda, on the downside. So we should be due for a pretty good rally sometime in here. As you know, the cycle should be bottoming between now and Tuesday, which is that's the last day for the cycle that we're looking at for to be bottoming. And then we should rally for a few weeks. That'll really determine, what the next nature of the market is going to be. So we'll see. Someone's asked a question about a hammer. Yes, a hammer is a reversal signal. It's the opposite of a shooting star, as I remember. And, I look at candlesticks on the charts because they're easy to see and they're easy to count. But the actual, patterns, I can remember the two black crows and engulfing lines and stuff like that. But basically, I just look at the patterns and the ratios. That really leads me more or less to where I want to go. So sometimes wrong, sometimes right, but who knows? We had some pretty good volatility today in the euro. We're down well over 100 pips in the last hour or so because Mario Draghi is speaking, and the British pound is approaching the 139 level, which we were trading at 149, around Christmas time. By the way, folks, we have a very unusual astrological event coming on Sunday. We have a new moon. And we also have a Mercury is going to be changing direction too. We're going to try to have Norm Winsky on next week early because he was able to tell us that was really quite interesting. So we'll see. Okay, now we'll wait and see what's going to happen. Excuse me, that I did say full moon, didn't I? Yeah, I did say full moon. Yeah, it's a full moon, and then we have Mercury moving into a direct motion. That's all part of these things that we've been watching, closely. And hopefully we'll have Norm on, but if not, I'll ask him the interpretation of it. But we are very oversold in the market. Part of it was taken care of yesterday, but we still have farther to go to the downside. Now, if we look at the small cap index, which is the Russell, you'll notice that we did complete the very long-term ABCD pattern. It went down there, hit almost exactly, and then of course we reversed and closed up on the day. That means we should be bottoming in here. But the steepness of this trend down since November, well, actually around December 1st is really startling, and that tells us the market is bearish, folks. If you just look at this chart, we made that butterfly pattern on the top up there on May the 19th, which was the day when we had the Mercury going retrograde with the full moon, new moon at that time. And you can see the steepness of the down move that we've had over these past 6 months. Now, we are very, very oversold. Now, the question that we have to answer now is how much of a rally are we going to get? As you can see from the chart we had here, from the lows we made we broke out of those August lows in early September, if you'll remember. Then we rallied to a 61% retracement in the small caps. Then we came down and made the ABCD. So it's the Dow and the S&P and still the NASDAQ, that are holding this up. And you're only talking about, 150 stocks. 50% of the stocks in the S&P 500 are considered in a bear market now because they're down well over 20%, and very few of them are above the 200-day moving averages. So, that's something that we also want to keep in mind. Now, the next one that I wanted to talk about is the gold market, because we hit a real interesting spot in gold yesterday. We made over the last week's trading range, gold made a absolute perfect ABCD pattern. Wait on just a minute. There we go. A perfect ABCD pattern up there at that 1110 level, and now we've backed off to the 1092. Now, if you'll just imagine what this back off looks like, you'll notice that the retracement that we had on the 19th was 61% retracement. Same thing here at 1092, 61%. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay. All right, we're back, folks, and I've posted into the Tiger TV the chart of Deutsche Bank. That's the largest bank in Europe, the German bank, of course. And if you'll notice that the stock is the last time that I updated this, which was Friday, it was trading at 19. It's now below 17. It's trading for 16 and change. They had more bad news come out. They're going to have to be laying off some people and cutting back a little bit. But there's a big problem. This chart, folks, is very, very similar to the Lehman Brothers chart back in 2008. If you'll remember, Lehman Brothers was the largest a bankruptcy ever in the history of the United States. And, of course, it was the too big to fail key that all the banks use to get back in business again. But we'll see. Volkswagen is also having trouble. But, you know, the chart of Volkswagen is not nearly as bad as the chart of Deutsche Bank. The Deutsche Bank chart is incredibly bearish because of all the gaps down and the way it's going down. Yes, it's going to be bailed out. There's no question. They're not going to lose Deutsche Bank. That's their flagship. And believe me, the German folks are very proud people, as they should be, and they will put that bank back together. I don't know what form it'll be, but they'll be too big to fail. I can almost well, you can't say that, but you know, we'll see what happens. But this stock looks like it wants to go to 5 or 6. That's where it really looks like it wants to go on a very, very long-term chart, maybe even below 6. And if you remember, Bank of America got below 5 back in March of 2009. It made $4.86. I believe. Yeah, maybe Goldman Sachs will buy them out. We'll see. But anyway, this stock is extremely weak. Yet the Deutsche Bank has not really pulled down the DAX index itself. And if we take a look here over the last 5 trading days in the DAX, you're going to see a nice three drive to a bottom pattern that we had yesterday. It was a perfect ABCD coming in there at that 92.50 level. We had a pretty good rally off of that, and the markets continued to rally a little bit this morning. So there was some type of a bottom at least short term in this. Now, I don't know whether it's going to be a 2-week rally or a 3-week rally, but have some pretty good ideas based on some of the cycles that we're looking at. But right now, we should be in an area where we're going to find some support in here, and whether we rally much from this level remains to be seen. The fact that we were able to rally 70 points in the S&P in a matter of a short period of time is not surprising given the volatility that we're having. We go up 50 and down 70 and up 30 and down 40, and these are wonderful volatilities, and yet you're not seeing that in the volatility index. I mean, no one's afraid. I mean, that to me is just an amazing. If you'd have told me where we're trading in the Dow and where the VIX is now, I'm shocked a lot in these markets. No question about that, but I would really be shocked because back in August, the VIX hit 51. We're trading under 27. Actually under 26. So this is not a sign of a market that is acting like what the volatility says it should do. So I don't know what that means. I will let Basil Chapman describe that because he certainly knows it better than me. I'm just looking at the bars on the chart. That's primarily all I'm looking at. But frankly, we made the ABCD in that long-term daily New York Stock Exchange Index, and that's the one that's kept us in the promised land, folks. This thing has been bearish for a long time. This is only the second major ABCD pattern that we've had in this since 2009. The last one we had was in 2011. So this could be a very important one. Will be an important one, to no question about it. But that's what we're looking at here. The news out of China, they change the rules over there all the time, but the China market is not collapsing like we did over here. The Hong Kong market went about 500 points under the 1.618 expansion number, and then it rallied back, but it's still a couple hundred points below it, so it's still still quite bearish. Also, the emerging markets stock index just looks absolutely horrible. I mean, it just doesn't look like it has any help at all. Now, I wanted to talk just a little bit. This next chart comes from our good friend John Murphy. John's one of the deans of technical analysis, and he shows this chart of the CRB index. And as you can see, we're at the lowest levels that we've been since, in the 1970s. Boy, that's hard to believe. That's back there. Wow, I can't believe where I started at Drexel was there in 1970, in February of 76. Look at that. Holy cow. And we're down into that area. We're a little below the 61% retracement. But if you look at this chart really closely, you're going to see a really nice ABCD pattern. So that could be a very interesting one also from a long-term perspective. And we've got some interesting cycles coming due. Let's just switch gears since we're talking about commodities. I wanted to bring this up because we had our good friend Shane Smulyan from wolftrader.net on a couple of weeks ago, and he forwarded this chart to us on soybeans, and this is based on some of the lunar cycles that he's looking at. And as you can see here, on the 20th, we topped yesterday in soybeans. We made what we think is a minor top, and if we come down into February, we should be looking to maybe around February 2nd. Not too far away, just a couple of weeks. We want to be looking for a potential buy here in the soybeans, so we'll watch that. Now, on the same day that he gave us this chart on the soybeans, he also gave us the chart on the euro currency, and this is another one that is basically a lunar forecast. And that's not right. I did that one wrong. Shut the front door and raise the rent. This one comes from our good friend Larry Williams. We're going to get Larry on this show if we give a few minutes of his time. But it looks like around February 16th we should be bottoming in the euro, and it's still coming down, which is what we'd like for it to do. Today it's down quite a bit, so we'll be watching this one. Larry does a lot of great cycle work too, along with Martin Armstrong. I mean, he's in a class all by himself. But I will say this: I haven't seen anybody do any better with cycle stuff than I have with Shane Smolian at wolftrader.net. He's done a fabulous job with his the work that he's done, and he uses Alfie Lavoie's titanium package for his price forecast. Now, when we're speaking of Martin Armstrong here, I wanted to put up this chart that was posted by one of our friends here in the den, Mr. Z, from Martin Armstrong Analytics, and he's showing the long-term real estate cycle with the Case-Shiller Home Price Index. Now, this is, going back to, 1880. I wasn't even trading in 1880. I didn't start trading until 1893, I think. I think that's the year I started, but I don't remember for sure. But as you can see, we could be in for some serious contractions in this. I mean, no one thinks that could happen, but when you see houses for $150 million, boy, that's a lot of money for a house. But when they're that big, I guess it's okay. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at one of the stronger stocks that's been going on, one of the Dow stocks. It's ExxonMobil. As you can see, we came down and nearly touched the 786 retracement yesterday before reversing. We also made a small ABCD pattern, so if you're interested in buying anything, this is something that offers a very low risk because your stop would be below 71, so you'd be risking less than 3% in this stock, and it could rally well at least 10-15% up to 80 if the market does make some type of a bottom in here. The key points here that we're looking at, folks, is the strength of the way this market is broken in January. It's broken all records going back into the 1800s in the Dow, including 1929. It's been the strongest down move we've ever had, the worst day ever on a January opening day January. So these are things that it's really quite interesting to look at. Now, since we're talking about an oil stock, I think it's important that we look here at the overall pattern now, because this is one that we live and also die by, and that is the long-term pattern that we're looking at here in the crude oil complex. This is the spot crude, and as you can see here, this goes back to April. We rallied from 40 all the way up to 60, rallied $20 a barrel. We came down into August, and then we rallied up into we went from 38, and we rallied $14 a barrel up to $50 a barrel, and now we're down, completing this big ABCD pattern that we have going on right now, and it's completing. This is we're down 15 weeks from May through August, and now we're down 15 weeks between October and where we are right now. And believe me, the whole world is bearish. Now, what's interesting, I follow open interest each day just to see if there's any big changes, and we had a big increase in open interest yesterday, and with open interest increasing and prices dropping, that is usually a very, very bearish sign. But the question that I have is, who is buying into a lower market like this? I don't think it's the small speculator, because they're not nearly as well heeled. But with oil at $26, $27 a barrel, that's pretty cheap. What that also does is it makes the margin to trade oil a lot less. So I think we're getting near a bottom. I've looked at this with heating oil before, as you can remember, and heating oil is also on a really long-term basis, doesn't look nearly as bearish as it does on the crude oil. In fact, we'll put this up here to let you take a look at it, and you'll see that the long-term chart on heating oil looks far different than the long-term chart on crude, because crude oil has gone down, has retraced 92% of that move from 2000 and actually from 1999. This is the low from 2000 and 1999, and then also 2007. So we're still making a big ABCD pattern here in the heating oil on a long-term monthly chart, whereas the crude oil has gone all the way down and retraced 92%. So, and that's the crude oil is the leader of the pack. That's what they crack to get the heating oil. So, want to watch that, kind of closely to see what's going on here. We'll see how much we're going to be. Every time this market rallies up in the morning, it usually sells off a little bit. There's a little bit of resistance up here in the S&P, up at that 1875 level. That's the 61% retracement. We hit that again overnight, just a little bit, and then we backed off a quick 30 points. This thing, we used to have a 10-point swing in the S&P, would take us about a half a day, and now it does it in about 5 minutes. So there's a lot of trigger fingers, happy trigger fingers out there today trading. So you want to be careful when you're looking at these. Now, there's one other chart. I want to get back to the crude oil that I just got off my train of thought here a minute, but there's one other chart that we have to look at when we're looking at crude oil, and that is the Canadian dollar versus the U.S. dollar, because that has got a correlation of about 95%. And if you'll look at this long-term chart that was furnished to us by our good friend Tom Pelk from Nomura Securities in London, and you'll notice that the three drive pattern that exists here between 2014 and 2016, and we went right up to that level. Now, the high that he was looking at here was 145.29, and then Sunday night, we gapped up all the way to the 147 and change level, and now we're trading substantially below that. So we've had a pretty good reversal in the dollar Canadian currency, and yet crude oil has not moved at all. So this is a potential positive sign for crude oil, based on what we've looked at in the past. So the whole world is bearish, that stuff. So I would be really careful. Use a stop. And we got oil numbers coming out today in about an hour and a half, which always move the market quite a bit. So just keep in mind that that's what we're looking at, and we'll see what happens from that level. The key things to take away from today's talk that we have is the fact that we had this beautiful hammer pattern in the Dow Jones Transportation, where it was down 300 and came right back to close up on the day. The same thing with the IWM. That's very characteristic of what happened back in August the 15th of 2007. And as we mentioned many times, this market is acting just exactly like it was doing in 2007. It couldn't act any more perfectly. So we've got to see what this rally is going to bring us here. Now, the market that I believe that is going to be the next flying Walinda on the downside is the Treasury bond market. We have had a big rally here in bonds recently. Yesterday during the debacle, we had a minor flight to quality when we hit the 61 level for just a short period of time in the Treasury bonds. But as you can see, since November, we've been in a pretty strong uptrend, especially during the December and January when we had those higher bottoms, which is one of the more powerful signals that you can have when you're looking at trading with the trend. Because if you have higher bottoms, you have an uptrend. If you have lower tops, you have a downtrend. That's the real definition of what a trend is what it happens to be. So we want to watch this very, very closely. Junk bonds are still going into the toilet. And the other thing that's happening is the fact that, with this stock in Germany with Deutsche Bank, this is a big player over there, folks. And believe me, they have a lot of tentacles out there. In other words, mortgage companies and other stuff that are there, and that's going to be a major thing to look at. We noticed that Union Pacific today, one of the Dow Jones Transportation stocks, is down 7%, which will probably pull that down for probably just a little bit, but it certainly looks really interesting from that perspective. If you'll remember, we get back to the Canadian dollar. We've had another question about that, and then I wanted to share you something about the Federal Reserve. Okay, we'll take a little break. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and we have a caller from Fort Lauderdale, Florida. Max, are you there?
Yeah, good morning, Larry.
Good morning. What can I do for you?
I want to thank you for doing your show and the guest you have on.
Well, thanks. It's fun. I get to visit with my friends, and as you're quite aware, I have some really smart friends, and especially Bill, because he speaks several languages, and he spent not most, but quite a few years working in Saudi Arabia. What can I do for you, my friend?
A question on open interest.
Yes.
I see on the oil contract the open interest is going up. How do we know it's buying and not selling?
Well, the reason why is if the market is going down in price and open interest is increasing, the shorts have control. In other words, they're selling at lower prices. You follow me?
Yeah.
Okay, see, there's somebody's buying. There has to be a buyer for every seller, but the shorts are the stronger because the prices are going in their direction.
Right.
Now, there's a formula for that I have posted in here several times. I'm not able to do it because it's in my Dropbox, but it shows the 4 things that can happen, with open interest. Now, what we'd like to see with open interest, if we're on the bullish side, we'd like to see prices dropping. Okay, prices dropping, and then open interest also dropping. That means the shorts are leaving the market, and that's what leads to these big short covering rallies. Tomorrow, what I'll do, Max, is I'll post that little formula that Steve Breeze has. It's been out forever. It was even before he was doing it, but it just shows you if open interest is increasing and prices are increasing, it's a sign that the market's moving in that direction. And that's what's happening in crude oil right now, is that we have prices going down and open interest increasing, and that's a sign that the market is still weak. But the question that I have, Max, is who's out there buying? That's it's a big contract, and to have it move that much in open interest in one day, and I guess it's related to Iran being off their sanctions, but the market did not it just didn't collapse like I thought that it was going to. But this is someone who's got a position that's bullish, and I could be wrong, but the cycles tell me that we've been down for 15 weeks. The perfect ABCD pattern that we have in crude oil on the weekly tells us that somewhere right around this $26 barrel level is where they're going to draw the line in the sand. So you risk about 80 cents here and see what happens with it.
Okay, thank you. Have a nice day.
Hey, thank you for calling in, Max, and I appreciate it. Hope I answered your question, okay? And tomorrow what I'll do, if you'll listen in, I'll post that formula for crude oil in the market, and you'll be able to take a look at it.
Thank you.
You bet. Okay, we're weakening here. We rallied up into that 61% retracement resistance. I'll show you this. I believe we can. This is the old chart from yesterday that we were looking at for the bottom to come in around 18. And of course, we got down to 1804, and then we rallied up another equal rally up into that 1872 level, and now we backed off, to the 1845 level. Now, if you believe, in Fibonacci numbers, the one thing that you want to pay attention to today is to be sure you watch the longer term 61% retracement of this whole move that we had from 1804 up to 1875. We rallied 71 points. That comes in at around 1832. That's only 15 handles from where we are, and we've already dropped 25 handles in the first hour of pre-market and the first half hour of trading. So we can very easily make this 1832 level, and that would also be, if you're looking at a 30-minute chart, it would be a perfect ABCD pattern coming in at 1832. So watch 1832 really closely in the stock indices here for the S&P, because that's going to be a very, very interesting thing. Now, remember, these things jump around a lot, so make sure that you're going to use a stop. And you definitely, because if you don't use a stop, you're telling the market, look, I'm smarter than you. I know where it's going to go. I don't have any fear. And the time that you don't use a stop is when they put the fear of God into you, and then you're in big trouble. See, we've already given up over 70. Well, we're below the 786 retracement of the whole rally last night, from 1836 all the way up to 1875. We rallied 40 handles there. Now we're down 35 handles from that. So we're having tremendous volatility for swing trading. This is an ideal situation. So really watch 1832 on that level. And of course, if it breaks that, it's could go to 1820, which is the 786. I don't believe we're going to take out 1804 on this run, and the reason why is because what happened in the transportation and what happened in the IWM yesterday. That was just too much of a reversal and too much buying, and it was coming, very, very near, one of these big cyclical dates that we're looking at that extend out into Tuesday. But that's just my opinion of what I'm looking at. The other thing is the bond market has not taken out any of the key levels. It needs to get above 162 in the bonds in order to get this cowboy totally confused. But I really believe the 161 level and change is going to hold it for a while. But this morning, watch. We're only 10 handles away. Around 1832 in the S&P would be the one that I would be watching. Very, very closely. There is someone's asked a question about the euro. We've looked at this euro, many times. It's got a really big picture that tells us that it wants to go to parity. We're trading around 108 and change right now, and I think we're going to get to parity. Whether we break from this level or from a higher level, you're not really sure, because the real action is happening, in the equities, and then also a few of the currencies like the Japanese yen and euro and then the pound. Look at the pound. We got the pound all the way down, almost breaking 140 today. We got to 140 and change, and was trading at Christmas time. It was trading around 149. That's a big move in a month, and not even a month. And so we're having some tremendous volatility, which we are going to see. We have been too I guess non-complacent would be my guess, or we had been too complacent or non-volatile for this whole move from 2009, and then we bottomed a little bit in 2011 when we had another ABCD correction, and then the one we had now at 2015. Someone's asked me a question that if we've made this ABCD correction in the New York Stock Exchange Index, could that be a big buying opportunity, much like we had in July of 2011? And my answer to that is I do not believe that with about 105% conviction. And the reason is the long-term pattern, which is that 5-wave reverse point wave that happened on May the 19th. So that tells me that this market is going down. Not only that, the market is screaming to you that something is not right. When we have the worst day in the history of the market on January, the worst January since Moses was trading. So something's not right here, boys and girls. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've had a couple of questions from our good friend Danny in Atlanta around about silver and also platinum. Now, platinum has gone down and, touched those old lows that we had way back in November, And it had a pretty good rally. Now silver, same thing, it went down and made newer lows or slightly higher low, excuse me. But silver and both platinum are acting very poorly. And what that is I believe it's I believe it was a situation where that the overall commodity indexes are all going down. I mean, iron ore, everything, silver, copper, steel, everything is going down, and a lot of it's attributed to what's happening in China. And folks, when you see a figure, that they give you in China of what the GDP is, boy, remember that we have bad enough figures that we have in our government now. You can imagine what it's like in China, because they can control the whole darn thing, and they can put about anything they want into it by manipulating data. So be careful with listening to the data, and be careful with anything you do here, because that's including what I say, and Steve and Basil and Tom and Tommy, everybody. It's just a Daryl. It's just the main thing of what we're looking at here. And we'll see. Someone asked a question if Moses was a bear. Moses was not a bear. But remember the old saying from the Bible, Jesus saves, but Moses invests. So Moses was a long-term bull, I believe. So, keep that in mind. The other thing is that I'm really shocked about are these 3 CIA guys that were abducted. Boy, you talk about going about using what deep cover means. Boy, these guys really made a great sacrifice going into deep cover operations over in Iran. I hope they get back okay. Usually it's a question that they've been kidnapped for money, but we'll have to see, what really happens. What I'd like to know is what happened on those first commandments that God broke, or that Moses broke. What were those first laws? 877-927-6648. Stay tuned for some great entertainment and information from TFNN.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.